central banks and gold. Most of the world's countries consider that the United States dollar is the only foreign reserve that the greater its balance, the safer it will be at the procurement level, especially in developing countries. While many central banks around the world have recently moved to acquire gold and raise their reserves from it, we have seen the Central Bank of Uzbekistan have purchased about 9 tons of yellow metal during July and a similar quantity in June. The Qatari bank bought about 15 tons in July, with Qatar's reserves reaching about 73 tons. According to the World Gold Council, the jewelry industry sector is the second most in demand for gold globally at 37%, while central banks account for 17% and the remaining share goes to the technology sector. It should be noted that gold is distinguished by the diversity of sources of demand in comparison to digital currencies, where most of the demand comes from the investment sector at 40%. So why are central banks currently moving to increase demand for precious metals in greater proportions than before? Some analysts consider that the 16-month drop in gold prices is one of the strong reasons why central banks have increased their turnout, with gold falling below $1,700 per ounce. Gold is inversely affected by the dollar's movement. In its attempt to control inflation, the Federal Bank raised interest rates on the dollar significantly, which had a direct impact on the fall of gold trading indexes in 2022. According to Lombardi market analyst Mo Zulfikar, gold is an asset that in the long run has little correlation with other assets, so banks' reserves remain constant. Sean Villier, President and Investment Director of Equinox Partners, says he sees gold as a tool for central banks to protect themselves from the global sovereign debt crisis, and added that many developing countries have a significant exposure to the US dollar, which remains at its highest level in 20 years. Most of the world's central banks are seeking an alternative plan to help not make the United States dollar the world's only reserve currency, and as they seek to find a strong alternative that can be trusted, they may have found only gold to be a safe haven in the coming years. However, gold continues to decline and lose for now, especially after Powell's last speech in Jackson Hole on August 27. In an effort to counter inflation, the Fed raised the dollar's interest rate by 225 basis points, equivalent to 2.5%. Despite the current decline in gold, it is a safe haven and a hedge against inflation for many investors. And when we talk about buying a bank in a country or even buying a particular investor for quantities of gold, we mean buying real gold. Physicist gold. It is entirely owned by the person we are talking about, and we do not mean at all to buy gold through trading platforms, because from our point of view it is not a purchase but a speculation, and by the way it is good in certain circumstances, as the futures system is also good to deal at the moment, and this is just a personal opinion. For individuals who want to invest in gold, we see the bottom where gold is currently a good opportunity to buy within the limits allowed by capital. Will the decline continue, or will there be signs of gold rising in the near future? Given the global geopolitical situation, there are still problems between Russia and Europe with regard to gas, and entering this year's third quarter, winter is a major obstacle to the European economy this year. Also, the tense situation between China and Taiwan persists, which needs considerable surveillance. Many economic analysts also expect the Federal Bank to raise the dollar's interest rate by an additional 75 basis points at the next meeting in the 21 of this month in its ongoing attempts to rein in inflation. So what if the Fed raises the interest rate on the dollar again? Will the price of gold continue to fall, or can there be a turning point in its course? Is it currently best to buy and retain physical gold until its price rises, or buy on digital trading platforms? That's what we'll recognize in the coming episodes. Follow us